What's up, YouTube? Welcome back to Scalpology. This is part 3 of the 4-part series on how to start as a day trader in 2022, all right? And this video is going to be about candlesticks, okay? Reading candlestick charts. Candlesticks are what we use to base our trading decisions off of. So it's very important that we know how to read a candlestick chart and know what the information on the screen is telling us. So let's hop right into it, all right? What are candlesticks? A candlestick is a single bar which represents the price movement of a particular asset for a specific time period. The information it displays includes the open, high, low, and close for that time period. So in simple terms, a candlestick is a visual representation of time and price action of a stock. Candlesticks are made up of 4 components and represent price and time. So a candlestick has an open, a close, a high, and a low. A single candlestick represents the price action of a stock over a period of time, anywhere from seconds to 1, 2, 3, 5, 30, 60 minutes, or daily, weekly, monthly. So depending on what the time frame on the chart is what the candlesticks are going to represent. And we'll get into that. We'll go into some charts. But now it's important to be able to read what a candlestick is, okay? So looking at the green candlestick. Now, a green candlestick means that the price opened lower and closed higher, okay? A red candlestick denotes that the price opened higher and closed lower. So for a green candlestick to form, price has to open at a certain level. Let's say it opens at $1, all right? And let's say this is a 5-minute candlestick. So within the 5-minute price action time period, the candle goes all the way up to $2, all right? Then the candle goes all the way back down to 95 cents. All right, but then the candle gets bullish and closes at $1.75. All right, that's represented by this 5-minute candle. Now, if the candle's bearish, if the candle's red, price opens at $1, shoots up to $1.50, then gets sold off all the way down to 50 cents. All right, and then closes at 75 cents. All right, so that's what these candlesticks are representing. They're representing price action over a period of time. And you can tell whether the price closed higher by whether or not it's a green or red candle. Okay, so this is a bullish candle and this is a bearish candle. Now, we don't base our trading decisions off of candles in isolation. So just because this candle's green doesn't mean the stock's bullish and that we're going to make a trade. It's a bullish candle, but it doesn't mean that the stock's trend is bullish. So there's certain candlestick formations that we're going to look for and ones that are going to be ready identifiable on charts. All right. And we'll never trade these in isolation, but these candlestick patterns are a good representation of where price could go. All right. And after we look at these candlestick formations, we're going to hop into the charts and we're going to read price action on an actual candlestick chart. So a doji candle. Now, what a doji candle means is that there's indecision, right? Because at some point during this candle being open, price went up and then price got sold back down, but price closed right almost where it opened, right? That's an indecision candle. There's no buyers or sellers in control, all right? But where this candle forms on the chart is very important, okay? One of the candlestick patterns that I really like is engulfing patterns. Now, when you have a bullish candle fully get erased by a bearish engulfing candle, which means that the price has just absolutely sold off and erased all of this bullish price action, that's a very bearish sign. And the reverse of that would be the bullish engulfing, okay? Whereas you have a bearish candle and then you have a bullish candle that just absolutely erases that price action, all right? Another sign of a reversal is the harami. Now it works either bearishly or bullishly, okay? It's when you get some nice bearish candles and then you get a hammer. See right here, you get a hammer. This could signify that price is reversing, right? That seller or that buyers are stepping in and are going to continue to take the price higher. The reverse would be that sellers are stepping in. You get a nice topping tail. Whenever there's a higher wick or a lower wick, these are called tails, all right? And you could see that the bulls kind of pushed price up and then got slapped back down, right? Sellers pushed price down and it got bought back up. Another good pattern is tweezers, okay? Tweezers signify these bottom wicks, all right? The bottom wicks. These are basically just double bottoms. We'll get into that in technical analysis, but these are basically just double bottoms shown as candlesticks price action, okay? Means that there's very good support here and there's very good resistance here. Hammers are really good at signifying price action because you know that buyers have stepped in to close this candle higher than it opened. Again, sellers have stepped in to close this candle lower than it opened. And then you got what's called a morning star and an evening star, all right? These are reversal patterns. You know, you get a hammer, kind of like a harami setup, and then you get almost a bullish engulfing. So very important to know what to look out for as far as candlestick formations forming. But we don't trade these in isolation. It's important to know where on the chart these set up, right? Because if you have, 7 bullish candles in a row and then you get a hammer, it's not as bullish as if you had, 6 bearish candles in a row and then you get a hammer. So it's very important not to trade candles in isolation and just say because it's hammering out, it's going to be bullish. No, you have to look at technical analysis as a whole, where the candlesticks are forming inside the chart, and make your decisions based off that. So now what I want to do is I want to jump into an actual chart and read price action based on the candlesticks. All right, so what we're looking at is a 5-minute time frame on the S&P 500, right? The bread and butter of the market. Now, perfect example of what I was just talking about, okay? This is what? This is a bullish harami, okay? And this is formed on a 5-minute chart. So each one of these candlesticks represents 5 minutes of price action. Looking at this candle in particular right here, price opened at 424.69, was pushed up to 424.74, then sold off all the way down to 423.93 and closed at 424.01. All right, and then we start to see some patterns set up here, okay? This is a bullish harami, right? We get the hammer after a nice large sell-off. So that's indication that you could get some bullish momentum, right? And if we pair these things with technical analysis, like trend line breaks, support, and resistance, you begin to be able to make investing and trading decisions based off of these candlesticks, because these candlesticks are human emotion and price action. Look at this hammer forming after this bearish candle. Now, if you get this candle that just fully engulfs this bearish action, then you can start to make the thesis that the price is going to rise, right? So candlesticks represent time and price action, and you can switch that price action for whatever you want. These candlesticks right here represent an hour, okay? If you switch it to the 4-hour, each candlestick represents 4 hours of price action. If you switch it to the daily, these candlesticks represent a day's worth of price action. And seeing that this is the market, everybody is inside these candles, right? Me, you, Warren Buffett, Elon Musk. This is a visual representation of everybody buying and selling their stocks at a certain period of time during the day. So what we have here is a visual representation of human emotion, right? Buying and selling. And we can start to make our investment decisions based off of this. So on the daily chart, you can see today, price opened at 424.84 and has been trading as low as 421.60 and is now back up to 422.53. So at some point, this day will be over and this candle will close like these candles right here. So as long as you basically have the gist of reading a candlestick chart, right? And for each time period that these candlestick charts represent, then you can go further and start to learn technical analysis and pair candlestick chart reading with technical analysis. So on the next video, we're going to go over technical analysis, and we're really going to put all this together so that you can make your first trade based on technical analysis and reading a candlestick chart. I hope you found value in this video, guys, and I will see you on the next one.